Good day to one and all. This is Dr. Sivaraman of iknowindices.com. It's nice that come back for the second part of the webinar, and let us straight away take up the analysis. So it is tracking the forex market together, part 2 between 15 and 15:45 GMT. So I was giving the part 1 between 9 and 9:45 GMT, and I gave the trading call, and let us see what happened to that, and also the positions what I had taken, whether I was able to close it with a profit or close it with a loss, then what happened to the highs and the lows in each pair. So we will track the market, what we have witnessed earlier during the European session. We will track it currently and see what are the changes that happened with regard to the levels of the majors and also the commodity pairs. So first of all, I'll just give the link for the live market code page, because you come across some interesting aspects happening in the market. Even though thin volume condition is seen, still technically I'll be able to explain. Now, currently Euro is trading around 1.3202 and 1.3204. The low formed now was 1.3200, and earlier the low was 1.3222. That was the initial low. Then subsequently, towards close of the European session, they formed the low 1.3202, and now it has come to that low of 1.3200. So just slow dip has happened from 1.3222 to 1.3200 currently. Now 30 minutes from the start of the US session, the high was intact and the market did not go there. 38 pips negative net change is seen. But in the case of GBP, it was hovering around that of 1.58, and it made a brief upward stop into 1.5859 and subsequently made the drop. I was mentioning that initial high set for GBP was 1.5782. They have come up to that. They have not come up to that of the low. So this is what you come across, and I kept during that of the European session an order to buy around that particular area you might be aware of. Then in the case of yen, it is 83.93, 83.96 are the current levels, and earlier it was 83.67, and then they made a downward stop and afterwards started making the rise and made the upward stop and also. Then you come across the spread is around 50 pips. So positive net change of 18 pips seen. Earlier about 22 pips spread was seen during the European session, and then later on quickly gained and made an upward stop for the weekend. So ultimately you can understand that they make a downward stop and below that of the initial low and an upward stop and above that of the initial high. Then you can understand the importance of the initial lows and the highs set during that of the Japanese session between 2:30 and 3:30 GMT. And similarly in the case of Swiss franc also, the spread was hardly about 23 pips, and then subsequently they made a spread of about 42 pips by making a downward stop and an upward stop, and currently making about 5 pips negative net change. When Euro is making 39 pips negative net change, CHF is making 2 pips negative net change. It is a contrarian move. When Euro is showing negative net change, GBP is making positive net change. It is again a contrarian move in order to handle the crosses. So before going to the other majors, they wanted to handle the crosses to start with, because the data is out, and afterwards they know very well that the traders who are holding the long positions will try to liquidate in a hurry for the weekend, and they will just make a dip and induce them to liquidate the long, and then subsequently when the long liquidation is over, the traders also try to take sell positions and then try to take it upward. So that is why always you come across during the session start time the swings happening in the market. Now with regard to the Canadian dollar, and it is holding around the same level, not much of a change. With regard to Australian dollar, 98.57 was the initial high, and they have come slightly below that, about 2 pips. Still it is far away, 30 pips away from that of the low 98.29, and they made an upward stop, and similar to that of GBP during the European session I was making a reference, because they were staying above that of the initial high. They quickly made an extended rise and just hit the stops and then came down, and currently trading around 98.53, 98.56 around that of the initial high. Then I also made a mention about these initial highs and the lows in the blog, and those who have not made a note of it, I'll just show it again. So you can see that initial low in the case of Euro was 1.3222, and the high was, initial high was 1.3255, and it went up 32.55, and then it has not gone above, so I closed it around that. That is the initial high. You can understand how they are respecting it. Above that of the initial high, initially they made an upward stop and formed a new high, 32.81, and came down to that of the low without breaching the low. They went up to initial high, then came down and they breached the low, and now they breached the low and also the psychological level 1.32. Now they formed a low 1.3197, and it is 30 minutes from the past, from the start of the session, and by about 15:10 or 15:09 GMT, they have made a brief downward move in the case of Euro. So that may give that impression that market could drop further because the US data was positive, so the market could drop. But later on, we will review how exactly the players are trying to act against that of the traders. Then in the case of GBP, 1.5749 and 1.5782, the lows and the highs. And currently they are trading around 1.5778, 1.5782. So they are hovering around that of the initial high. They have not made a big drop. Then in the case of Swiss franc, they made a downward stop, and below that 98.24, that was the initial low set between 2:30 and 3:30 GMT, and they came down to that 0.9798 below that of the psychological level, and went up and made a 5 pips upward stop and above 98.35. So they've set the new high 98.40. So making a small swings in that majors, they've been handling the crosses mostly. In the case of yen, 83.68 was the low. They breached and formed a new low, 83.46 during the late European session, and then subsequently they gained the levels and cut the high 83.84 and staying above that. So it gives a technical trade opportunity around 83.84 or 83.87 level. We can try to take a buy if they sustain above that of the high for more than 30 minutes. They are already holding it around 83.94, 83.97, a small dip, we can take a buy position. Then in the case of Australian dollar, 98.29 was the low, which is still intact, and 98.56 was the high, and they are holding around that 98. They have come below that 98.51, 98.54 are the current levels. And let us see, GBP also came down below that of 57.82, and if they stay below that, and the next target will be 57.49, and they, similar to Euro, what they had done, they could come up to this and go up, or they can make a brief downward stop, and because hardly you come across about 30-35 pips, they could make a downward stop and then take up. So let us watch calmly and decide how exactly we can take the positions. Then in the case of Canadian dollar, 1.0098 was the low, and they breached it and came down to 1.0085, and currently trading around that of 1.0099, 1.103. So they made a downward stop and then come above. The high is, they cut the high by 1 pip. So you can understand they want to gain the level. So during the start of the year session, they wanted to gain the levels in the case of the denominator currencies, and subsequently after holding those levels, they are expected to gains in the case of numerator currencies also. This is what they are doing it most of the days. So we will just track the market and understand how exactly they are handling it. Anyhow, now 1510, they breached the low in the case of GBP, initial high in the case of GBP, and also they cut the European session low during that, because during the late European session, they breached the low 1.3222, then the session got over, then afterwards the gap time. Now we have to see in first 30 minutes, they are not gone above that. So there is a technical trade opportunity, but because of the thin volume, so we may not be able to do a sell and buy trade there because they could track. So we have to watch and see they are not breaching the low for 30 minutes to 2 hours. Then we can try to take a buy position there. So these are all the initial lows and the highs for our reference, so that we will be able to understand what the players are trying to do it. And as I explained, in the case of Euro as well as USD CHF, they are showing negative net change. They are doing contrarian move. And also in the case of Canadian dollar, negative net change or 0.00. Australian dollar is about 21 pips. And now it has become just 4 pips. So quickly they made a drop. So they could take it to that negative net change level and try to handle all the crosses to start with. And then subsequently they could come to that of the majors. So you can understand how exactly they respect the levels which are set during the early Japanese session for the day. Now let me come back to the positions what I took during that of the European session. And while I was talking to you during the European session, so I kept the initial buy order 1.3227, and that was not filled, and then subsequently I modified and took a buy at 1.3237 with a stop also modified to 1.3211, and then I immediately when Euro went up, I moved stop at entry so that I will not take any risk with regard to the position. And 1.3255 was the initial high, and they went up to that and they just showed the bid. Afterwards they are not gaining it, so immediately I closed the position with 18 pips profit. So now you can understand how the initial high is important for us to have an understanding of the moves, what they are doing it, and then above that of the high was a stop point during that of the European session. Similarly, during the US session, European session, they made an upward stop in the case of GBP above that of the European session high 1.5824 and went up to 1.5859, then subsequently started coming down, and this is the buy order I kept. And since the session was getting to over, so I just removed the order which was not filled. Then again I will review it for the US session. Then during the US session you find there is a small change in the trend, and they are just trying to dip Euro and GBP based on the data release, and they come in the case of GBP below that of the initial high, and Euro they formed a new low 1.3179, and Swiss franc also they made an upward stop, but they are not just gained the levels above that, even though Euro is dropping, so which indicates that they are exclusively handling the crosses for that they are making the moves. It is not the real weakness of Euro. If we try to derive that looking only into that of Euro and think that Euro is dropping, so let me do a sell and buy trade, then we could be trapped. As long as they try to do contrarian moves, they will not make any big drop. They will only try to hit the stops and then try to reverse it. So this is with regard to the trade. One trade was not filled, one limit order was not filled, so I just removed it. And the other limit order in the case of Euro, I just modified and took a buy and just closed it with a nominal profit, as they are not gaining much of the levels. And that too I closed it before the data release by 13:30 GMT, because whenever there is a data release, you know that the market is expected to make the swing. So when the going is good, either you keep stop at entry or just close the position. Watch what sort of action is happening in the market. See, sometimes they can just make a move in tandem with the expectations after the release of the data, or sometimes they can just make a reversal move and telling some other story. So you would have seen last week, Thursday, when BOE announced the interest rate decision, and they are not made any rise, and then subsequently after the BOE press conference they quickly dropped euro to 1.3066 and then subsequently gained in a matter of about 15 minutes to 1.32 level. So that is what they do it, and so they create the sentiment and act against the traders, and we have to be very, very careful with regard to such moves. And we will not be able to give any sort of interpretations, and we can give several excuses, but the real story we won't be knowing. The real story is they are trying to trap the traders. Similarly, with regard to the BOE interest rate decision on Thursday, you would have noticed that there was no action in the market, and subsequently that was released by 12 GMT, and after the 13 GMT time they went up to from 1.5737 level, they went up to 1.58 level. So that is how they make the moves in an unexpected way. They do not want the traders to track the market so easily. So we have to put all the effort and understand the market. So hope you are able to understand, because I cited these examples with regard to data release. And if you think that University of Michigan sentiment and it has become positive, so obviously euro is going to drop and I am going to sell, if you try to do it, then we could be trapped. So we need to understand, first of all, the timings of the market. Japanese session is from 0030 to 7:30 GMT. Then 7:30 to 8 is the gap time before the start of the European session. European session got over by 14 GMT. That is why I closed. The data gets released by 13:30 GMT. So I closed the position before that without taking any chance for the data release. So every day you can just look into the schedule of data or the events to be published, and just before that you can try to close the positions. And afterwards, if you want to participate in such spikes, then you have to necessarily watch the market carefully, read the intentions of the player, then try to take position. It is very risky to hold the positions that is taken before and try to close it after. What you can do is they normally make a false move before the data. At that time, if you have got a sufficient usable margin, then you can try to take, if they drop, a buy position, if they rise, a sell position, and then quickly you should be able to exit out of the position. Otherwise, you might find distressed trades happening. Then gap time is between 14 to 14:30 GMT. During that time, we saw a dip in the case of Euro and GBP, and then subsequently, we are expecting a gain. They made a nominal gain, and 14:55 GMT, the US data was released. US session starts by 14:30 GMT, and then from there they made a dip in the case of Euro and GBP. Now they formed the low 1.3179, and they are not breached the low in the case of Euro. And GBP, they are making a little more dip in order to handle the crosses, and it's also come to negative territory below that of the initial low. Probably most of the GBP short sellers, breakout traders, what they had taken during that of the Japanese session, they would have closed it during that of the European session and turned long, and that would have induced the players to make a dip below that of the initial low. So this is how we have to read it, and still they have another level, 1.5749, that is the low they have set, and we have to see how they are respecting it. If there are stops below that, they will try to attend it. And so based on their move, we can understand whether the stops are there, limit orders are there. So we will not be able to have any access for such sensitive information, but from their move we can identify, because even though they know such sensitive information beforehand. Then 21:30 GMT, US session gets over, And after that, gap time is 21:30 to 0030 GMT the next day. And gap time moves or false moves. Keep it in mind. Most of the time, you come across that. Then I was explaining during that of the European session, the factors to be considered before initiating a buy or a sell position or before taking a trading decision. So we have to track the market using the GMT timing, identify in which session we are trying to trade comfortably and stick to that particular session. You need not take stress and just keep awake during midnight or early in the morning and try to do the trade, and market continues to give the trading opportunities. But only thing is you identify which session we are trying to trade. If you are trading during the early session and the late sessions, then you can concentrate on the majors. If you are trying to trade during the mid sessions, then concentrate on the crosses. You will be able to make some swing trades. And for that, use the live market code page. I'll give the link for the same. You can use the link, the same link I have given it here. So there this particular link I'm using it to refer to that of the initial highs and the lows, and you can make a note of the initial highs and the lows. They are set between 2:30 and 3:30 GMT during the early Japanese session, and then subsequently also make a note of the net change and try to track the net change. Now you find that Euro and GBP are showing negative net change, and still Euro has not breached the low, what is formed as 1.3179, and GBP has made a dip and come closer to that of 1.5749 and currently trading at 1.5754 and 1.5758. Let us watch for another 6-7 minutes and see whether they are trying to breach it. And Japanese yen, they took it to 84, just the psychological level, and then you come across Swiss franc still in negative net change, so that means they are still handling the crosses. So let us go through this content. Then identify the currency which you will be able to really take position and earn some profit. So which way you can identify a currency? When you are watching the currency, you try to see that currencies which are making at least 40 to 50 pips spread between the high and the low. Such currencies will give trading opportunities, because basically after taking a buy, you should be able to book profit in that as quickly as possible. After taking a sell, you should be able to book profit. And with the currency is making about less than 40 pips net change, then if you try to take a position, then the holding time will be very high and it will test the patience. So also you will be blocking your usable margin. Then if you find another currency is really interesting to take a position, your usable margin may not permit you to take another position. So if you try to take another position, that may lead to over trading. So we need to understand that first of all we have to identify the currency, which is very important, a factor to be considered before taking trading. So don't have any sentimental attachment to any of the currency pairs. So any currency pair is tradable, and they are not tradable all the time. So they are tradable on certain events, and whenever you come across a downward stop or an upward stop and they reverse the market in less than 30 minutes, then you find such currencies you can really take the positions, because they are trying to do a downward stop and before making a rise, or an upward stop and before making a drop. So European session, you would have seen that during that of the Japanese session, they made an upward stop in the case of Euro and then started dropping. And during the European session, they made an upward stop in the case of GBP from 1.5824 to 1.5859 and then subsequently made the drop. And you should be able to identify such moves and try to take the positions. Because I already committed that I will do a buy and sell trade, so I have not taken offline the sell and buy trade in the case of GBP, even though that was recognized because they did not sustain the high for more than 30 minutes. So I am just giving the information how the trading decisions can be made as simple as possible. So when the currency is closer to the low or closer to the high, then you can consider taking the position. When they are in the middle level, then avoid taking the position. Now in the case of GBP, it is not near that of the low and it has breached the initial high. So it is not advisable to take the buy position or a sell position at the current level, because they are trying to handle Euro GBP. When they are trying to handle Euro GBP, they obviously either move quickly Euro or move quickly GBP, holding the other currency. So if you try to take a position, then they will be testing our patience. If they try to make a downward stop and by the time Euro has gone above that of the initial low, then we can take a buy position in the case of GBP. So we have to consider all the currencies for our reading purpose, and you can choose any one currency for trading purpose. So with regard to the entry decision, so within a session you should try to take a position, the exit out of the position. You can buy near that low or sell near that of the high, or when they are making an upward stop or a downward stop, you can try to do the same trade, buy during the downward stop or sell during the upward stop. In case if they try to do it after the first 30 minutes, then if they try to do it within 30 minutes from the start of the session, then wait for 2 hours. So you should be able to define the stop-ins, and the stop-ins normally happen for about 30 minutes, and if they do it in order to handle the crosses, then probably about 45 minutes to 1 hour, they just reverse it. Let us just watch in the case of Euro and GBP. Euro especially, they made a downward stop. Let us see whether they are rising it back above that of 1.3202 first, and then subsequently 1.3222. So there is no need to take a position. You can just watch whether these concepts are working. Then subsequently you can watch it for several days and see that this is what happening in the market. Simply using the live market code page, you can really take trading decision. Then probably you can use it as a tool and try to trade. Then similar to that of the entry, the exit is also equally important. Today you would have noticed that I took a buy position in the case of Euro, and it was looking slightly firmed up and not breached the low, and I was giving the webinar, so there was no chance for me to take a position closer to the low. So slightly I took a buy position about 10 pips above that of the 15 pips above that of the low. Then subsequently I found that 1.3255, the initial high, they were not going above, so they wanted to make a drop and then go up. So obviously I closed the position. So exit is also very important. So you have to give importance to that of the initial low, and you have to give importance to that of the the new low, and also give importance to that of the initial high and also the new high of the previous session. Then you will be able to understand till from that of the initial high to that new high, they will make a slow rise, and from there they will start making quick rise. Similarly, from that of the initial low to new low, they will try to make a slow drop, and then subsequently they will make bigger drop. So you have to keep that in mind. If they stop cutting the recent low for 30 minutes or stop cutting the recent high for 30 minutes, understand they wanted to reverse, because market shows intraday, weekly, monthly, yearly trend reversals. So, and also session-wise trend reversals you come across. So we have to be prepared for such trend reversals. We should not simply develop a bearish feel or a bullish feel and get trapped during such intraday trend reversals or within the session's trend reversals. Now, in the case of European session, you know that they gained the levels in Euro and GBP, and then subsequently after not breaching, so that is rough. Many of the people, they call it as Euro was not in a position to breach the initial high because it was looking heavy and things like that. It is not a question of heavy or light and things like that. The players are not willing to take it. There could be several reasons for it. One could be a low volume, and beyond that, they did not find any necessity to make a rise or a drop in a thin volume condition. At the same time, in thin volume condition, you could come across a big volatility also. So if they are to handle the derivative market like futures and options during that of the month end, then probably they will make big moves even though you consider as a thin volume market currently because of the year end. So don't have a preconceived idea with regard to the year end. And if you refer to the charts of the previous years, last year for example, euro came down from 1.47 to 1.4 to in a matter of about 2 weeks. The last 2 weeks they suddenly started dropping. So similarly, you come across a rise also. So in 2005 they made a very quick rise that way. So either way moves are possible. So keep that in mind. Don't have preconceived idea that December means the thin volume, so market may not make big moves. And in a thin volume condition, there are two possibilities: one subdued move, another very virulent or a wild move could happen. So exit, you have to identify with regard to the levels what I have just mentioned. So the initial high or the new high, you have to keep it as a limit and keep the limit orders there. The going is good, you can move that limit order using it after keeping stop at entry. The going is no good, just exit out of the position or just use that stop as a trailing stop and come out of the position with a nominal profit. Then when you come across such thing, you can also go in for a counter trade. You know, whenever they are making a upward stop and you can do a counter trade, or a downward stop and you can do a counter trade for buy. So that is also possible. Using the next slide, I'll explain. Then use the stop always to limit the risk. And many of the traders have got a tendency to avoid keeping the stop, and that may be dangerous in case if they drop and if your position makes more loss, then you do not know how to handle such positions. So always either use hedging order or the stop. If the hedging facility is not available, don't worry. You accept when the loss is small and don't try to magnify the loss. When the profit is small initially, try to keep stop at entry and try to maximize the profit. So that is a professional approach to that of trading, rather than simply allowing the loss to grow and quickly grab profit when the profit is seen. That is an impulsive act. Then after keeping stop at entry, you are eliminating the risk, so you can try to maximize the profit. So if you follow these strategies, then it will be easy for you to trade on a daily basis. Otherwise, if you are stopped out for one or two times, then you immediately think that it is better to avoid a stop or keep a wide stop, or about 70 pips or 100 pips and things like that. If it is stopped, instead of you taking a chance in 3 trades, you will just lose it in 1 trade, and that may demoralize you from taking further positions. And many of the traders, they just allow the positions to increase with the loss without restricting the loss, without understanding that the players are trying to trap the long holders. Then we have to try to exit out of it as early as possible. Similarly, the short sellers exit out of it as early as possible. Then you come across another system, margin call. So that is why you come across such tricklish situations are being provided in the trading platforms, so that you have to necessarily keep the stop instead of attracting the margin call and lose all the money. Then entry and exit can be fine-tuned. How? You can keep a limit order. Just keep a limit order around that of the high or around that of the low, or just 1 or 2 pips above that. In case, for example, now euro is trading around 1.3190, 1.3192. They stopped cutting the new low 1.3179. If I want to take a buy, then I can just keep it around 1.3182, just about 3 pips away or 4 pips above that of the initial low or the recent low. That way we can try to fine tune rather than just taking a market position. If we try to take a market position and if they dip about 2-3 pips, immediately we find or we are demoralized, and immediately we start telling that I am not lucky in trading and things like that. So many attributes we give without understanding that you are impulsive in your trading decisions. So avoid impulsive decisions during buy or during sell. If the order is not executed, simply remove it and look for the next session. You will continue to give an opportunity. See, I kept a buy order in the case of GBP around that of the initial high. Then subsequently I removed the close of the session, and now I get a better level to enter into the market, and also I will be able to watch how exactly they are respecting the low 1.5749 in 30 minutes to 2 hours. Then I can try to take a buy position. So you always find that market gives a better opportunity. So don't be possessive of the positions, and also don't have any sentimental attachment to any currency pair. So if the initial highs or the lows are reached, current situation, you find the initial low has been breached. In the case of euro, 1.3222, I showed it in the another slide, that was the initial low, and in the case of GBP, 1.5749 is still intact, which is the initial low, but we breached the initial high 1.5782 and come below that. So it is currently trading around 1.5759 and 1.5763. So I will not take any position when it is in the middle level. So how exactly they are going to respect the low? Because it's hardly about 20 pips, and definitely they will try to make an attempt. And in the case of euro, they set a new low because, euro looks very weak for many of the traders, and when they drop immediately they will think that it is USD gaining move. If you carefully look into other currencies, you find that CHF is simply holding it. It is not USD gaining move. And Canadian dollar is simply holding it. It is not showing USD strengthening move. So Swiss franc and Canadian dollar are not making USD strengthening move. Probably some people will be telling that because people look for safe haven currency towards the end of the year, so they are all buying CHF. What about Canadian dollar? It's also safe haven. And what about yen? Earlier the people were telling that it is a safe haven currency, but why it has breached the high and stayed above that? So we can give an explanation whenever it is comfortable, and when the situation changes, we just avoid giving such comments. So that's part of human nature. We cannot help it. But ultimately, your understanding is more important. So when they are making a stop end or an extended stop end or a stop end or an extended move or intentional move, you have to identify. I go in the details with regard to these types of moves in my trading system webinar, which are being recorded and displayed in FX Street archives, and also they are being linked to that of my blog, Market Reading. So you can go through that to understand the type of market moves they make. So in case for extended move, wait for 2 hours. Now a situation is there, so you have to wait for 2 hours. They breach the low and see that the new low they are respecting, and then later on we can just enter a buy near that of the new low, or you can go in for a counter trade. When they make a downward stop, and you can just make a buy. If they try to stop cutting the low and recover it very fast, next dip you try to buy it, then you'll be able to book profit. And if they are making just breaching the low and staying below that of the low for more than 30 minutes, like euro, what they had done, below that of 1.3222, so obviously you have to wait for 2 hours and then initiate a buy. So that way, if you try to do it, then we'll be very, very safe, and we'll be able to see most of the occasions profit, and our stops could be rarely hit. There will be chances, and I will not say 100% in foolproof system, and there can be unexpected eventuality can happen, and that is why the stops are being recommended. And if majority of the trades you are able to earn money and a few positions are being stopped out, like about 70%, 80% of the trades you are able to successfully earn, that should be fair enough. If the stops are tight, And if the profit making, wherein you use the strategy of maximizing the profit, then the loss making trades will not really hurt you. Then if they cut the low and the high or the low and stay above the high or below that of the low for more than 30 minutes, you can do a technical trade, a quick sell and buy trade. In the case of Euro, they breached the low 1.3222 and stayed below that and formed a new low 1.3202 and came up to 1.3217 and 19. At that time, you could have taken a sell position and just booked nominally about 20-30 pips profit as a technical trade. And people call it also a breakout trade. But exit strategy is very important. Once they set the low, new low, and not breach the low, you should be able to exit immediately. If you look into the chart, then Euro can go to the recent low 1.3066. If you just imagine without keeping stop at entry, then probably you might be facing problem. So always you act for the current trade. You can always visualize what could be the long-term level and the short-term level, etc. But don't think that in your current position you can achieve it. If you think that way, then probably that acts as an obstacle for you to take decision and it becomes an emotional grip, then probably even the swing trade profit you may not be able to grab. So whenever they are making an intentional move, wait for at least 2 sessions. Then next session only you can try to take a position or exit out of the position. Suppose you are taking a sell position and continuously they are dropping in the first session and the second session. Third session initial drop, you try to close it. And if you continue to hold it thinking that it will drop another 500, 600 pips, because that's what happened most the last month. And when Euro came down to 1.2967, many of the traders who had taken the higher level sells, they thought that is my first level of profit booking and subsequently I'll wait for Euro to come down further down to 1.27, 1.23. All imaginations. Okay, fine. Have you taken appropriate trading strategies? If not, they'll come back and reduce the profit. So that is very important because you know the hat trick rule, they don't continuously make similar moves for more than 2 sessions. So the third session, they may make it as if it is going to drop and then quickly reverse the market. So you should be able to understand. And now Euro has come to 1.3202. That was the recent low of European session. And also in the case of GBP, they are not breached the low, but still let us see that Euro sustains above that of 1.3202 for about 10 minutes to 30 minutes. Once you understand the market reading well, within 10 minutes you will be able to read their intentions. Otherwise, wait for 30 minutes and if they stay above 1.3202 without any hurry, probably you can try to take it around 1.3210 or 1.3208, the position, and still you might be getting about 5 to 10 pips lesser profit, doesn't matter, but your trade will be very, very safe. So always keep in mind that this sort of trading decisions with regard to entry and exit are very important. Make a note of the initial lows and the highs, and the players are using as a reference levels for the entire day. You would have noticed today I showed you how they respected the initial high in the case of GBP and also respected the initial low in the case of Euro, and we have seen it, and subsequently they have broken it. It doesn't mean that it is going to be a strong support always. No? And once the short covering is over, they can just, in the next session, they can disrespect and make a downward stop and then go up. So yesterday also US session, they came down to 1.3166 and then subsequently went up. And today you come across 1.3179 has become the new low and they have come above now 1.3208, 1.3209 or the current level. So this is how they do it. So now you are able to understand how they are creating the market sentiment, and this is an impact what they showed it as a University of Michigan consumer sentiment. Now it is going to be discounted and they will make the move according to their wish. Now in this US session, Euro and GBP are expected to make swing and price move for weekend. This is what the forecast say. We have done the market reading also, and now we'll think about the possible trade. So Euro is currently trading around 1.3206, 1.320. Okay, I'll keep a buy order 1.3190 because after holding there, they could make a brief dip and come up. I'll just wait with this limit order and see if it is getting filled or not. If it is not filled in 30 minutes time, I'll try to improve and try to take a position as a market order. I explained it during the European session. A similar strategy I'll try to do it. So they formed 1.317 as below. They may not come up to that. Probably they can just drop about 10 pips below that of the low what they set 1.32, the psychological level, and probably they may come to 1.3192 or 95. I'll just modify the order. So I'll keep an initial decision of this nature as a limit order, then keep the stop. Buy limit order 1.3190 with a stop 1.3160. And in the case of GBP, still I have not decided because it has neither gone above that of the initial high 1.5782 nor gone closer to that of the initial low. So they could make use of GBP to create some sentiments up and down moves. So wait for that, and then subsequently when they are closer to the low, we can try to take a buy, and probably they should respect the low, what they are set 1.5749. Then in the case of CHF, you come across again subdued moves, and yen, I told you, 83.84 was the initial high, and we can take a buy. Just 2 pips above that of the initial high, 83.84. I'll just keep 2 pips above 83.86. Current level is 83.91, 83.94, and I'll keep a stop 30 pips below. The Australian dollar, I told you that 0.9856 was the initial high. They breached the high and came down a little bit, but still they respected the low 98.29. So similar to that of GBP, a condition is seen. They are still short of 1 pip around that of the initial high. So I will not try to take a position there. I will just watch. If they are dipping and making a dip and trying to come closer to the low, then we can watch whether they are respecting it or they are trying to do a stop, and then afterwards we can try to take a buy position. Then Canadian dollar is not making any big move, so at the moment we are not entering into that. So these are all the 2 trades I thought of. So we have to identify the currency with the reasons based on our concepts. Then probably if we try to keep the limit order and fine tune the order and try to take entry position. And don't think that now you find that euro has gone to 1.321416. So I am not repenting on that. My order is not filled because I know very well they try to swing the market, and I will try to get that opportunity to enter in the market in an improved level. When the going is good, I can even enter it slightly higher, but not after about 30 pips rise or 50 pips rise and things like that. That is very, very important. So these 2 are the trades I identified. So let us see how they are respecting it. Now GBP has also come above that of 1.578185. So if it stays above that for about 10 to 30 minutes, you can understand the downward move is over. We can buy it even at 1.578285 level. So now we are able to see when there is a drop, you are not trying to do a counter trade blindly and trying to take a high risk, and we are trying to see that they are able to handle the market properly and we read and get convinced with regard to our concepts, then later on we try to take our trading decision. These sort of understandings are very important so that in every trade we should be able to earn money. That is our basic objective. We should not deviate from that of the basic objective and become addicted to trading. Let me focus the camera over that of the live market code page and take up the questions which are asked here. Okay, so everything is left now. Albert wants to know what is going to happen on Monday. Monday they are expected to make a flat opening and then subsequently gain the levels. Then Chand. You say, I'll post it in the blog anyway, Albert. You said that a low of the previous session is not broken. How does one know that low on at what time one can use this? See, I explained it. The initial lows and the highs are to be noted down, and also with regard to the recent highs and the lows. And this either you can take it from a chart in case if you don't have the initial lows and the highs noted down during the Japanese session. But if you try to note it down during the Japanese session, then you will be having authentic information for you to take trading decisions. Otherwise, you refer to the chart and take it during that time. Then till what time euro will not gain today? Why, Devangam, you think that euro will not gain? It is gaining now, so don't lose your heart. So small swings may perturb us, but we have to understand, once blindly you cannot pray to God and say that no, euro has to go up, somehow I have to make profit in my position. That is not going to help. You have to use your intelligence and you have to use your concepts and you have to see that they are respecting such levels, because whatever be the hidden agenda of the players, they have to let out in their market action. So look for that, how they are respecting their own levels. Then you will be able to understand, this is what they are trying to do, I am not afraid. So once you get rid of the market fear, you find your trading becomes much more sensible. In JD, for the last 2 days, players make normal lows below the previous session low and then rise from middle of the session. But if they do the move again today, they will breach their hat-trick rule. No, every session they are making swing. In the swing, they have to earn. No, they are not simply making the up and down move for you to make money. They are making money. So in that process, they have to hit the stops and earn. Okay. My phone numbers are available in the website, sir. But calling me, you can talk to me only about 5 minutes or 10 minutes. But your understanding is more important, sir. Then they want 40 to 50 pips spread should be initial high and low or at any given time between 2:30 and 3:30 GMT. I think you have been attending Asian Session Live Market Analysis webinar on a daily basis. I am just giving it. And for the benefit of others who are not able to attend the webinar, I am now posting it in the blog also. From there you can make a note. Then but I was long GBP and closed it around 1.550. Yeah, with a profit. Good. But after that, I was afraid to go short. No, you can avoid going short. You can just look for the drop again. Because if you try to do either way trade, in the last trade if you are trapped, then you might be losing all the money you earned in your earlier trades. So don't become impulsive. When the going is good, don't try to become more active in the market and try to do either way trades. And you know pretty well, they make such moves, up and down move in the market to give a range so that immediately people think that, okay, in this level I can buy, in this level I can sell. Say for example, earlier when euro was around 1.30 to 1.31, many people thought that, okay, 1.30 I can buy, 1.31 I can sell, and 1.31 I can sell and buy it at 1.30. They are trapped finally. So don't do that. Instead, you wait for the next drop and see how they are respecting the initial low and the initial highs and things like that, and try to take positions. That will be a better way of handling your equity and also doing safe trades. Okay, Anurag. If price sustains above initial high in GBP in 30 minutes, then we can take a buy. Yes, definitely. Still, it will be a better buy. See, instead of buying at 1.5759, that is what the low they showed it, 10 pips short of the low 1.5749. Instead, you are going to take it around 1.5785 or 82 or 83 if they sustain above that. So you might be short of 20 pips profit, but they could be able to easily reach above that of the recent high. Then either you make about 50 pips profit or 70 pips profit. Profit is a profit. And if you think that you wanted to maximize the profit, then try to use the trailing stop and try to take chance and try to close it to the next day or next session and things like that to maximize the profit. But the profit is seen, try to grab it and try to re-enter the market. I am of the opinion market continues to give trading opportunities. Then why you don't took the sell and buy? See, I told you that sell and buy trade in the case of CHF may not work well because the spread between the initial low and the high was very less. So it is not going to give a trading opportunity. That's how I avoided it. So I'll go back to that of the PowerPoint presentation. So this is the order I placed and they are not respecting it. And they have come closer to the 1.3222. Okay. So obviously they have quickly gone there. So we have to modify it in 30 minutes time frame. So 1.3219, I'll try to modify it and try to take a buy position, and 30 pips below I'll keep the stop. So it will be about 1.3281. So just modify it and see whether they are filling it, so that at any given time you are only taking a risk for 30 pips, not unlimited risk. So whether you buy euro at 1.29 or 1.32, it is immaterial as long as you are able to limit the risk and maximize the profit. Okay, then I kept the buy order in the case of yen and it came down to 90. Probably I'll just improvise it to about 2 pips and just see whether they are able to fill it up. So just keep about 1 or 2 pips below that of the market and see whether they are giving a fill, definite fill in the real trading platform. Sometimes they will give a real fill, and then you can just otherwise modify it as a market order and take it. Now they are comfortably gone above 1.3225. So yesterday I explained that they are bound to do this sort of moves for the traders to do breakout trades, and they are trying to trap the breakout traders. So they know what the strategy the traders decide and they know how to trap them. So I take this opportunity to thank FX Street, and especially I want to thank, this is the last webinar for this particular year. I mean, as far as tracking the forex market is concerned. So I wish to thank Maud, Adinda, Sandra and Vicky, who have been cooperating with me and try to understand my shortcomings, and they are able to do it in a very nice way, understanding my style, and they have been moderating the webinars, and Adinda was nice enough to record even the My Trading System webinars and displaying it, and I am thankful to all the people, especially because I always say FX Street, so I thought I should mention the names of the people who are really interested or who are dedicated in their service. So I also thank those who have come here to listen to my talk, and it is a great pleasure discussing the trading ideas with you people. And again, we'll meet on Monday and do our usual Asian sessional live market analysis. Thank you one and all. See you.